Hello, what do we have here? A couple people jumping in
Katya.
now.
Oh, I don't know. I can't. Hello. For some reason,
Hey,
I have a very big monitor because I work from home, and so I'm not sure how to find them.
Because your mom doesn't really let them out.
Irene.
Hey, how are you?
I'm good. How about yourself?
Really good.
Good.
I enjoyed the presentation on trusts yesterday. That was awesome.
Oh, good. I'm glad you like that. I just got it uploaded to the Minria site this afternoon, so go check it out there.
Yep. In fact, I had to go in there to grab the link because I forgot to write it down last night. So,
Oh, okay. Well, hopefully you got it now. So,
yep.
good. All right. Hopefully we get a bunch of people on today. I just sent out email too, so of course I got queued up behind a couple other emails, so it still hasn't gone out, but it's going. Looks like it's in the process of going out now.
I think this is a fantastic idea.
Yeah, I was thinking about it because, like I was saying last week, everyone was calling me, and they're all calling in the middle of the day, and they're still calling. The phone hasn't stopped ringing yet.
Wow.
And like, I don't have the time to talk to everybody, so it's like let's just get on here and just chat, whatever anybody wants to chat about.
Oh, very cool. So you staying busy? Staying busy out there?
I am. I've gotten a few seller calls, but the challenge I'm running into right now with the seller calls is I'm going to be lower on my prices than before, and they're expecting me to be higher than before.
Right.
In their mind, oh no, everything's just peachy cream. In my mind, Armageddon's coming, and property's going to be worth $10 a square foot now in the next by the end of the year, right?
Yep.
Where do you find that happy medium?
Yeah, that's true.
I see Kim's on. Good.
Hey,
Hi,
Mike.
Kim.
How are you?
I'm very good.
Good.
Just waiting for people to show up. I just sent out an email to everyone in Minria too, so I did send it out about 15 minutes ago, but it got queued up behind about 30 other groups that we run all the RIAs.
Oh, wow.
Their emails are all going out at the same time too, so give it a few minutes. But I was just talking to Glenn yesterday, and him and I were talking about, if there is going to be some depreciation on the properties, which I'm expecting there to be. If you look back at the last time the market crashed, the nice thing about real estate, annually, it really only went down about 10% a year annually, even though we went from, because we did the math, it went from 200 and let's see, I'll just do it again for you guys that are on here already. Let's see, we went 238. If I remember the number right, it was 238,500 was the median price, and that would have been 2006, we'll call it, because I think that's when the market kind of started going down, and it took about 2 years for the market to crash, and then it went down pretty quick after that. But where it bottomed out was 2011.
Okay.
So the end of 2011. So it was like the end of 2006 was the peak, and the end of 2011 or the first part of, I think, January 2012. So we'll just call it 11. It went down to 111,000.
Wow.
Was the median price in the Twin Cities in January 2012, I think it was. So that's a drop of 127,000, but that's over, so 2007, 8, 9, 10, 11. So 5 years. That's 25,000 a year in value drop. And we started out at 230. So that's actually just shy of, just less than 10%. So we started at 238.5. Actually, that's 11%. It ends up being 11% roughly. So about 10 to 11% drop in what most people consider was the greatest drop. And I don't think we're going to get that kind of a drop this time. Because we have, totally different set of circumstances.
Right.
Do you expect that right now we're going to have a drop like in a month, or is it by the end of the year? Because
I don't know how to even answer that question right now. because under normal circumstances, I would say, hey, we'll have a lull. We'd have a small lull in the values, but this summer they would pick back up. But with everything that's going on right now, I don't know. We're gonna have to wait and see. If they say, you know what, in 2 weeks we passed the peak of this and they're gonna start letting people back to work and all that stuff, fine. Everything, I don't think we'll have that big of a drop. Maybe a 5% or a 10% at the most. But if this carries on through the summer, just imagine how many people are going to be out of business, out of work, how many loans are going to be in default, how many forbearances are going to, and hopefully, Kim, you could talk on this if you know anything about this. But there's a video I was watching. Well, here, I might as well just play it. I don't see if you guys can hear this. Just downloaded a video yesterday. Where did that go? You'll probably know this guy, Kim. All right, which one is it? This one here?
On Saturday, a broad coalition of
Okay, hold on. I'm gonna put this on my other screen and see if you can see that or hear it. Let's see. Still trying to figure all this stuff out here. Can you guys see the video?
Yep.
Yep.
All right, I'm gonna play it. Let me know if you can hear it, because I don't know if people can even hear this or not.
mortgage and finance industry leaders issued a plea to federal regulators for desperately needed cash. Requests from borrowers for the federal mortgage forbearance program are flooding in at an alarming rate. Servicers are granting those monthly payment deferrals with no questions asked as required, but the servicers still have to pay mortgage bondholders. The coalition said the scale of this forbearance program could not have been foreseen by mortgage servicers or fully anticipated by regulators. It is therefore incumbent upon the government to provide a liquidity facility for single-family and multifamily servicers. Any further delay could lead to greater uncertainty and volatility in the market. Now, I spoke with Jay Bray, CEO of Mr. Cooper, the largest non-bank servicer in the nation with close to 4 million, mostly government-backed loans. It alone has already granted over 86,000 forbearances. Bray helped regulators to set up the plan and was told there would be federal cash for servicers, but it never made it to the final act. He says without it, there is going to be complete chaos. Servicers will go under, leaving even more borrowers in the lurch. Joining us now for his take on this is David Stevens, former FHA commissioner during the subprime mortgage crisis and former CEO of the Mortgage Bankers Association. Dave, thanks so much for joining us.
Good to be with you, Diana.
Now, you disagree with the way this whole forbearance plan was set up, that borrowers don't have to prove any financial hardship. I'm told it was set up that way so borrowers would get relief immediately. What's your issue with that?
Well, I think there's a tension here where you don't want to be using federal dollars at a time like this to give it to people who do not need it. The forbearance program is an extremely effective way to help those who have real job loss and can't make their mortgage payment. But the way this is being rolled out is fraught with moral hazard. It's open to anybody, whether they're wealthy and have paychecks and can continue paying their mortgage, as well as those who truly need the money. And unfortunately, that's just going to balloon up the total size of borrowers who execute and take the forbearance plan, putting an extraordinary burden on the private sector and ultimately the taxpayer.
All right, I'm going to stop that there. How do I stop the video thing?
So, Mike, is he saying, did I get it right, that you don't have to prove anything? You can just call your mortgage lender and say, I'm not going to pay next month, or?
That's basically what he's saying. And there's several different issues that I'm seeing with this. First of all, yeah, you don't have to prove anything. Apparently, you just have to say, hey, it's hardship because of the coronavirus. Well, duh, if you live on this planet right now, you've got a hardship because of the coronavirus in some way or another. That's number one. But what she said just before she brought him on, that if you remember in that section, she said they set it up so that people could get immediate relief. Well, who on the planet right now needs immediate relief? Nobody. I mean, I just did payroll today, and the payroll included the work that people were doing here physically before the shutdown. I mean, it was just tail end. So they just got that payroll now. Right now, if anyone was going to get laid off and get unemployment, that's going to start in another week or two. And that's going to go out for 13 weeks. And I'm hearing people that are making more money right now on their unemployment than they were when they were physically working, especially the guys in the trades. Because now they're getting full-time pay rather than part-time pay, which is what they were working in the last month or two. They were getting late, they'd be off one day and then work another day. Now they're getting their full 40 hours. So they're doing better than they may have been otherwise. So where's the immediate relief needed in all this?
And also when people staying home, some expenses are going down. You don't pay for your truck for gasoline. You don't go eat out that much. And even if you order out, you don't order drinks because mostly drinks, when they go out cost more. And I don't know who decided that you shouldn't prove anything. You just don't have to pay, Right. So because that's disaster for the whole country then.
Yeah, it's just crazy what's going on. And then, like I applied for the PPP loan program. I don't know if I'm going to get it or not, but it sounds like what they're saying is they're not qualifying anybody. They're saying that if you applied for it, you're going to get it. I don't know how that's going to work out. So I just don't understand where the immediate need is that's coming right now. And I think that's going to push a lot of this back.
Oh, what did I do?
I don't know. You're getting up close and personal. That's all right, though.
Yeah, Mike, I've had a lot of people calling me asking about the forbearance program and if they should do it, and how it might affect them in getting future mortgages. And I think that's the thing that isn't being communicated to people is, a lender is going to look at someone who took a forbearance and want to really make sure that to establish the viability that they could not make their payment, that they didn't just choose not to, but that somehow they were directly affected by the circumstances and did not have the ability to make their payment. And not understanding this, and people are going into forbearance or deferment right now, and then in the hopes of looking to buy a home in a year, and they might not be able to because they're
that's my concern. That's where I'm feeling, and that's what Steve was talking about on that video, and it goes on for another like 4 or 5 minutes, and then there's a second part to that video where she was interviewing somebody else, and that's what they're talking about is, I mean, for right now, the people are, they made it so easy that anybody can qualify for these forbearances or for these PPP loans and those grants and all that. But on the back end of this, if you're not making your mortgage payment, they're still getting recorded as a 30, 60, 90 day late. Mm-hmm. And they're going to have a forbearance on, which is, my understanding is not quite as bad as a foreclosure, but it's still pretty bad.
It is. Yeah, and not only that, in a lot of these cases, the forbearance is simply pushing your payments out 3 months. So instead of paying $2,000 a month in your mortgage for the next 3 months, in 4 months, you have to come up with $8,000. Well, you're not going to have the $8,000 in 4 months if you don't have it now and you're not working. So that's going to leave a lot of people in the lurch because they don't understand the technicality. It's not being explained to them well enough of what this means to them.
Right. And Steve, I think I remember him even saying a lot of these are not going to, so some of the lenders are going to be, after all this is over, they're going to say, nope, now you got to make up. And then they'll increase their payment on their mortgage. Some of them will just add it to the very end of the loan, but it's still a forbearance. And if it gets added to the end of the loan, that forbearance stays out there for as long as you have the loan.
Yeah.
It never goes away.
Yeah.
So, and it's actually in many ways worse. I mean, actually, what we need to do is to get, I need to try and get Todd Rooker and see if I can get him on here one of these days, talk about this, because I remember the last time when this was all happening, he said, coming out of the 2008, 2009 market crash, for people, if you couldn't qualify for a bankruptcy, like myself, I could not qualify. I shouldn't say couldn't qualify. I could not afford to file bankruptcy back in 2009, 10, just because I had 5 businesses that I had to also file them on. So it was, the cheapest I could find anyone that would do it for is about $2,500 to $3,000 per entity, and I had to do for 5 entities, 4 businesses and myself. Like if I had you know, $12,000-$15,000, I wouldn't have needed the bankruptcy in the first place back then. So I remember consulting with Todd Rooker at that time, and he's like, okay, now here's the challenge though. The lenders are going to wait until they can see you're back on your feet. Yes, they did. They waited and saw once I was back on my feet financially, and they were, I don't know how they do it, but they were getting access. They had to have been getting access to my tax records, because the year after I filed a positive return on my tax records, they started hitting me with 1099s. So for about 2 years, even though I was showing a profit on paper, my profit was I was negative, or, you know, break even. My profit was huge. Like 1 year, my profit, or I made, my take home pay was $4,000, you know, on paper. When you get it all said and done, that's what I made for the year. So I fell underneath the threshold of even owing taxes, but I had $75,000 in charge-offs. So I had a $78,000 or $79,000 income that year that I had to pay taxes on, which put me into the top tax bracket.
Wow.
Right? Well, the same thing is going to happen here. So he said, and then the other thing he said is, don't ever, if you start negotiating with these guys later on and make off the payments later on, he says all those lates now show up on your record, and it shows as a result. So whenever you get done, and I didn't believe him at the time, but it took, so in 2016, 15, I started paying all these debts off, either discounting them or a couple of the smaller ones I just paid off. And my credit was working its way back up, and then it shot back down again. So it took me 10 years to get good credit after where everyone else that filed bankruptcy and were able to clean it all out, they had good credit in 2 to 3 years. Because I did the right thing and paid everyone off, it took me almost 10 years to get good credit.
Meta Manufacturing in Blue Ash.
What's that? No, sounds like I got somebody talking, probably not talking.
META Manufacturing.
Yeah, that'd be Andrew having another conversation.
Yeah.
Machine operator, CNC.
Is that the mute them?
Attaboy, Mike. Love that technology, man.
I'm sure, or quality.
There we go. Got him muted.
Yeah.
Right. I'm still learning how to use this Zoom stuff, so. Because I've been using GoToWebinar for many, many years. I remember trying Zoom a couple of years ago, and as an alternative to GoToWebinar, and their technology wasn't working. So I just stuck with that. But now, doing what we're doing here, Zoom is a better platform. So anyways, we got, I don't know, we got about 15 people on right now. Kim?
Great.
Can you share with, I was talking to Kim, everyone, last, what was it, Friday?
I think so.
I think Friday or Saturday, we were talking for a few minutes. And Kim had mentioned that, you know, you'd done like 8, I think you said, underwriting. And I'm like, really, you're still writing loans. I'm like, I was expecting that the whole market was shut down and Armageddon was here. And you're like, no, everything's fine in my little world. And I talked to like 3 or 4 other people that, but you know what? Everything's been fine for me too.
Yeah.
So
yeah, we've been getting purchase agreements in. It's been great. You know, it's not, I wouldn't say it's necessarily your typical spring market, but it certainly isn't the business we've been getting the last 3 months. There's definitely been an uptick in the business over these past few weeks. In part, I think it may have to do with less buyers. So the competition isn't quite as tough for them. But we're even, you know, pulling in a few refinances here and there too, as we see little dips in the market. But what's happening in response to what we saw on that video, which is the lack of funding for the servicers. Did that all make sense? They explained it way better than I could, but the servicers are lacking funding right now. So their concern obviously is that they need to continue to keep making payments to Fannie and Freddie. They're going to run out of liquidity and go bankrupt. So in their efforts to stabilize, they are retracting mortgage guidelines. So for example, and I think Mike, we were talking about this last week, they began by refusing to accept FHA loans under credit score of 620. Then it very quickly went up to 640. Last week, Wells Fargo announced that they're no longer accepting an FHA applicant with a credit score under 680. The jumbo mortgage world has almost completely decimated. It's very difficult right now to get a jumbo mortgage.
And where does jumbo start at?
What's jumbo mortgage? I'm sorry.
Any loan over 510,300.
Oh, okay.
So for those luxury home buyers that were planning on financing, they're really strapped right now because they don't have access to any funding to help them into a home. Today, now what we've been seeing is the mortgage insurance company. So when you put down less than 20% or you're doing a refinance and you don't have 20% equity, you need mortgage insurance. And the responsibility of that mortgage insurance is to pay back the lender if you default. So now the mortgage insurance companies have started retracting their mortgage insurance. As of today, we can no longer get mortgage insurance on an investment property. So if you're looking to buy a single family home as an investment and put 15% down, that's not an option today. And then they are expecting—
Is that true for multifamily homes, duplexes or triplexes?
No, it isn't. To purchase a multifamily home that you don't plan to live in, you need at least 25% down. So that piece doesn't come into play. But I have first-time home buyers using low down payment programs to get into multifamily, and that has not been affected yet. But there is some concern that that could also be an issue. Okay. Or even refinances altogether because of the concerns of people getting laid off and not being able to make their first payments. They're pulling back even on offering mortgage insurance to refinances. So those are kind of the coming things we're expecting to see as all of this plays out. And I think there was an announcement today that there's no intention of the government providing any relief to the servicing entities, although they've been lobbying for it since this all came about. So there's still a lot of volatility and unrest and uncertainty about what's going to happen.
Well, and I know Nancy Pelosi's been out saying, hey, round one, which is 2.2 trillion, which is actually 6 trillion. Most people don't realize the baseline is 2.2 trillion. But almost all those programs in there have a float rate that can bring it up to, if everything went to their max numbers, it's 6 trillion. And like 80% of it had nothing to do with coronavirus. It's all programs that they've been trying to get passed for the last 5 years anyways. They got them all crammed into this one. So she's saying, hey, that was just a down payment. The real stimulus plan, we're working on that now. That's right. What they've been saying.
Interesting. Yeah, it'll be interesting to see how that plays out. But as the mortgage guidelines tighten, and what happened last weekend, and Mike, you and I think were on a similar post on Facebook from a gal who sold her home in Iowa, and her intention was to come and close on her new home in Minnesota on Monday. And in that time, that program was no longer available to her. So she got ready to go to the closing table, and there was no money for her.
Yeah,
so those are the kind of things that are reminiscent of 2007 and 8, where we woke up in the morning and wondered if we were going to be funding loans or not. I don't think that's happening across the board, but I do think certain lenders just aren't in a position, Leader One, at least we've been in a position to carry some of that. So we're not creating mass destruction, but everybody kind of has their own capacity and ability to carry until their lines are full too,
Quick question for you, Kim.
Yeah.
Hello. So I'm wondering, are they basically reducing the size of mortgages at this time? So for example, my wife just asked me yesterday what I was earning when I qualified for the mortgage for our present house. Mm-hmm. And she's earning even more than that right now, but she couldn't get a qualification to even buy our present house if she wanted to. Are they shrinking the amount of mortgages people qualify for these days then?
Well, not necessarily unless you're over that 510. What could be happening for her is it could be most of the changes they're making right now are credit score driven. So perhaps her credit score fell below one of the thresholds that they're lending to right now.
But also debt to income.
What was that?
But also debt to income.
Okay.
Yeah.
Debt to income was lower back then. In
Yeah,
other words, you had less expenses.
right.
Yeah, kind of the difference was I did have a VA loan, which may make a difference, but I expected that, you know, she'll be somewhere close to, but what she qualified for was way lower. So I was thinking maybe we should go talk to another lender. And I just wanted to know if across the board, that's what was going on.
Yeah, you know, what I'm telling people that are under that 680 threshold right now is, you know, now's a great time to just take a step back and do what you can to improve your credit. Not to say that maybe you can't get it all the way up to 680, but maybe you can get it to one of those other thresholds, 640 or 660. And then as it starts to come back, we can help get people into our property.
Yeah, and credit right now is, I mean, that's another thing, because people are going to have to start, well, one, right, we're getting forced to use more credit in the first place. They won't take cash. But credit scores are, like, my credit score is going like crazy. Let's see, last month I was at a 750, and then I look at it again, and this month I'm at 683. Within a month jump. Let's see, this spring or this winter, at one point I was at 780. I dropped down 775. I dropped down to 625.
Wow.
Yeah, and well, what happened? I was carrying a balance at 775. I was carrying a balance, and then I paid everything off, and it dropped me down to 625. So 150 point drop in 1 month. So much that my American Express card said, hey, I went from a $20,000 credit limit down to a $4,500 credit limit because I had $4,200 on the card.
Oh my gosh.
A month later, my credit went back up to 750. Literally, no, 2 months later, it went back up to 750. And American Express was like, oh, by the way, you get $25,000 because you have such great credit. I'm like, and now I have zero credit I have zero balance on all my cards. And since that time, I've been paying once a week. I log into all my cards, and whatever my balance is, I pay them off that week. What we learned from Robert Mohan back in February.
Yeah, that sounded familiar there, Mike.
Yeah. So I've been doing that ever since then. So, and that's what we talked about at the meeting after the meeting when he was there. So every week I'm logging in all my accounts. I have carrying a zero balance on all of them, and my credit is still jumping from 7. You know, when I looked on the one 748, it showed on the one from last month, and when I refreshed it, it showed 683. Like, what is going on?
Yeah.
I got zero debt on all my cards.
Wow. Yeah, I can't explain that one.
Yep. Okay.
I really can't. That's so strange because it just
Make
must
sure,
have been
make sure your credit has not been stolen, Mike.
Oh no, I've been monitoring it. All that crap on there is all mine. I can identify it. No, but I'm just saying.
Have you also checked to make sure that you don't have your credit stolen?
Well, everyone should have some form of identity. Like I have Legal Shield for Identity Shield.
Okay.
They monitor that for me, and if anything did happen,
okay,
it's so much better than all those other ones out there because they actually do the restoration for you. They don't tell you how to do it. They don't help you do it. They just do it. You sign an authorization to release power to them, and they go and do it all. That's the beauty of Identity Shield through Legal Shield. So.
And they let you know.
Is that an extra product, or do you just get that when?
Yes, that's an extra product. That's an add-on product. It's like $10 a month. It's well worth it. And then they have a couple different plans. I think anywhere from about $10 to about $14 a month additional.
And as an aside, I don't know if this is going to hold true. I'm right in the middle of a couple deals. I've got a closing Wednesday, just signing another contract, hopefully this afternoon. And I'm just dealing with my little community bank. So our strategy is we try to find cheap stuff. We pay cash for it, and then we do a HELOC on them.
Yep.
And just for sake of argument, stuff is going really slow, and it's primarily the appraiser.
Mm-hmm.
Totally backed up. I talked to the little neighborhood guy out here that pretty much all the banks use.
Oh, we lost you there, Nick.
I think Glenn gave him the boot.
That was Glenn that did that?
I must have accidentally, yeah.
Well, and I was just talking to Glenn yesterday, and you said you had just sold a property and had multiple offers on it.
Yeah, I listed one on Thursday and then had multiple offers, went highest and best. So yeah, still, stuff is still selling.
Sorry about that, guys. I just had a thing say my internet is unstable, and then I went dark for a minute there. I don't know. Like, well, at least it didn't say I'm unstable. I guess that's the good news.
Well, I was gonna say, you sure it was your internet that was unstable, or you?
No, it said your internet. I looked really close because I wanted to be sure it wasn't me.
Okay.
The end of the story was when I talked to the appraiser, he said right now he's booking stuff middle of May.
Mm-hmm.
You know, five weeks out. He said because apparently you just can't find an appraiser.
Yeah, I'm doing a refinance for a HELOC, and we started that the appraisal before all this stuff happened, and I still haven't heard from the appraiser. So we're going in what, 3 weeks now?
Yeah.
Still haven't heard from the appraiser yet. He expected 2 weeks, and that was before this all happened.
Yeah, that's what I was doing too, and I've got one now where, yeah, I'm on my 3rd week, and I don't know.
Well, we'll see. It's going to be interesting.
Yeah, Fannie and Freddie loosened their guidelines a little bit, so they're trying to allow for more drive-by appraisals. Because, you know, some people are refusing to allow people into their home, and some appraisers are refusing to go into a home.
Yeah.
Which you can't really blame them. So Fannie and Freddie are trying to make accommodations to allow for drive-by in many cases, but not in all cases. And yeah, we're experiencing the same thing. So, you know, if you are looking to refinance or you're locking in an interest rate, and even with my clients that are buying and their contracts as they're 40 days out, I'm still suggesting a 60-day interest rate lock, because there's so many things right now we can't control, mostly the appraisers.
Yeah.
Is it because there's a shortage of appraisals, or because there's a glutton of people for purchase and refis?
Yes.
Refis.
All of the above.
All of the above?
Yeah, we need more appraisers, but the barrier to entry is so challenging that nobody wants to do it. You have to be an apprentice for 2 years to an appraiser before you can get licensed.
Really?
Yeah. I keep trying to tell Glenn to do it, but he just won't listen to me.
You mean for 90 hours and you can become a realtor and sell the crap, but you have to be 2 years as an apprentice to see what it's really worth, or to see what it's worth?
Yeah. Yeah.
Because apparently the software is that difficult to work.
Yeah. So you need 2 years of apprenticeship to see if the people with 90 hours did their job correct.
That's right.
Wow. That's crazy. I can't believe that. But I suppose everything changed after 9/11, or 9/11. Yeah, I guess it did then too. But after 2008, when the whole mortgage meltdown, and they blamed everything on the lenders and the appraisers.
Yeah.
Even though they had nothing to do with it.
Right.
Yeah, the whole system is different now, which is why if you get conventional financing, your appraisals cost twice as much as they used to. We have to use a third party to order the appraisal through. So I don't even know who the appraiser is that's going out to your home until I have the report in my hand.
Yeah. Yeah.
Oh, that's crazy.
Yeah. Yeah. It's
only
tough.
out here in the sticks am I allowed to actually have the guy's cell phone number.
That's right.
Because there's one appraiser?
Yeah, he's the only one. He's the only one.
Yeah. All right. Well, what else? Any other tips or ideas for us, Kim?
No, you know, I just think that, like you were saying, Mike, I think it's temporary. I don't think that this, you know, the crisis in 2008 was caused by the lending industry, you know, the housing industry. That's not the case here. We're just being affected by it. So, you know, if we can figure out how to help the servicers, which feels less and less likely, I think things will get back into full tilt. And as soon as people get back to work today, I think I just saw, I might be wrong, but I think my teammate just sent out a note that they've extended the stay at home in Minnesota. Did anyone see that? I think the
I
governor.
had not seen that.
Probably extended it to May 4th.
Till May 4th. Okay.
Great.
Another fucking another month, huh? Yeah, it's gonna take a little bit more than a month, Kim.
And that,
Yep. So we'll
and
see.
that
It'll be interesting.
parallels, and that parallels with the schools. They're also not allowed before May 4th. So that makes sense that they went across the board on that.
Sure.
Yeah, I can't. I expected 2 weeks. I didn't expect a whole month.
It's tough. It's tough.
Yeah,
I
you
do
did,
think
Mike.
I do think we're going to see lending get a little tougher here before it eases up. So in the coming weeks, if you're looking for financing, I get your programs and rates locked real quick, and prepare for uncertainty. And I'm sure you guys have all seen it, that there's now a new addendum to the real estate contract for COVID specifically.
No.
That if anyone in the transaction is affected by COVID, that the closing date can be extended for 30 days. Is that right, Glenn? 30 days?
The number of days is a blank date.
Oh, okay.
I just received one. The agreement that I just received over the weekend here, they had 45 days on it. But,
Okay.
But it is a blank that you can fill in.
Right.
Yeah, and I had an offer accepted last week from a client who is on furlough. And the seller said, we'll take it. We know you can't close until you're back to work, and she's a dentist. They took her offer.
Well,
Really?
So is there any new guidance from Fannie Freddie that they're going to allow people to be able to qualify even if they've been out of work?
No. I don't see that coming our way anytime soon.
Okay, that's what I was thinking. But I hear I'm connected with a lot of other folks in other discussion groups, and everyone's saying, "Oh yeah, that won't be a problem." I'm like, "Yeah, it will be a problem until there's guidance saying otherwise."
Yes.
They can't get loans. It is not uninterrupted work history.
Correct.
Well, and again, it kind of goes back to that, Glenn, when we first started chatting, we were talking about the illiquidity in the servicing market and you know, the inability of people to make their first payments.
Mm-hmm.
And right now that is of heightened concern. And I'll kind of give you an example. There's three big entities in this whole little mortgage servicing world. There's, let's say, Leader One is the lender. And then there's a servicer that collects your payments, and they skim a little off the top, but they actually sell the asset on the bond market, right? If Leader One originates a loan and we do not collect a first payment on the loan, the borrower can't make the first payment, no investor will buy that loan from us. That loan sits on our books. Well, we have capacity to carry some of those. But if all of our lines fill up with these loans that aren't getting paid on, we don't have any money to lend out. And that's just, you know, a small example. That's what the industry is worried about industry-wide, is loans that are considered in default that haven't made their first payment, that can't get transitioned over to the secondary market. They're just going to sit there.
Because you're just getting your funding through warehouse lines for your own internal stuff, right?
Yeah, of course. Yeah. So so we have become incredibly diligent. So in the other direction about verifying employment, and we call on the typical standard is to call and verify employment 10 days prior to closing. We're now required to call the day before and confirm employment.
Oh, wow.
And if they're not employed, we're not closing. They just will not fund the loan. Or if we get any indication that they won't be employed, because the questions that are asked are they still employed? And what is the probability of continued employment?
Well.
And the smart people say, no answer. But the ones that say, oh, I don't know, it doesn't look good, we can't close on those either.
Wow.
Yeah, that's good to know. I know I'd been kind of pestering you about that specific issue right when all this started to come down, just to say, hey, where are we at and what's going on. So
Yeah.
that's good to know kind of how you guys are dealing with that too.
Yeah, I really look at it as I see it as a market where we all need to be a little bit more generous and a little bit more kind than we've had to be for the last several years. You know, we have to understand that if you're going to sell a house to someone that has a W-2 job right now, something might happen and you need to be prepared for that. I had an offer go in last week from a W-2 employee, and the sellers said, we'll take your offer, but we want your earnest money to be non-refundable. I just don't think that's reasonable business right now.
Right.
You know, we have to work together and we have to have expectations that things could go wrong on either side. If you're willing to do transactions in this environment, you've got to be ready to be flexible.
Hey, Glenn?
Yeah.
The property where you had a call for highest and best, what kind of price range was that in? What kind of neighborhood?
It was a townhome. We had it listed for $260,000.
Okay.
Townhome in Eden Prairie.
Okay. So entry level in Eden Prairie.
Entry level in Eden Prairie. Yep. I mean, that's pretty much the only the only range that I really work in.
Yeah.
I mean, I do not get into anything higher priced. I'm always somewhere in usually the 180 to 350 range.
Okay. And that's where I play as well. So so far I'm feeling good. We'll see. I'll have 4 going here. A couple coming on the market soon. So one of these days I'll give an update. But
yeah. Over the span of 5 weeks here, I mean, kind of going back a little bit and then going forward, we've got 7 that we're selling and 1 that we're buying. So, I mean, all of those seem to go, I mean, most of those seem to go relatively quickly. We had 1 straggler and 1, it was just slow in winter time, but outside of that, the other 5 went under contract really quick.
Nice.
Oh my God.
Nice.
Hey, Glenn, this is Reen. I've been tracking on the MLS up in Anoka County and working with some buyers up here in the retail market. And I know in Anoka County, almost everything we've been looking at, 3-bedroom, 4-bath, less than 300,000, have been multiple offer situations within hours of coming on the market. And even homes that have come on the market in the last 2 weeks, almost half of them have offers accepted in 7 days or less. So for less than 300,000 in this area, that's been really hot. In fact, it's been hard to find things for people.
Yeah, I'd agree with that too. I mean, I haven't run into many highest and best in like 24-hour type time frame, but I mean, I'm not in that much of a hurry either, and I do push the prices up a little bit. I mean, I push my values, not on this townhome. On this townhome, I listed it after all this, and I actually listed it, I intended to list it for $270 initially. I listed it for $260 just to say, make sure it's off the books, get it off the books. We're buying better, we're buying cheaper going forward, but anything that I have right now on the books, let's just get rid of it and move on. So that's just kind of how it went. But all my other ones I was pushing, I mean, pretty much I was listing everything else I had for right in the ballpark at $20,000 higher than I expected when I initially purchased it, just because there's no inventory.
There's nothing. Yeah, there's nothing.
Yeah.
So Kim, my challenge right now is my buyers, they were FHA. And they're below 680, so things were looking at, they had to go new construction because we couldn't find any inventory. Things were looking good about a week ago, and now I don't know what to tell them. They're supposed to be out of their rental property on May 30th. The owner's coming back, and they're selling. What do I do?
Yeah, no, that's a tough one.
Yeah,
that's a tough one, because what if in 3 weeks they extend this stay out another month?
Exactly.
It's so unfortunate. And your contract was probably signed before the COVID addendum came into play.
That's right. Yeah.
I mean, the good news is the builder probably will hang tight for them when it's the place they're in where they've got to overlap. I would think in a market like this, you know, Airbnb, a lot of my Airbnb buddies are saying that they're struggling right now. What a great opportunity for people that are, their loans are blowing up at the last minute, right? Get those
Good
guys
idea.
in there. Let them stay for a month or two
Yeah.
until they can get into a property. Those are the kind of things. I always look for the what ifs. What are we going to do if?
Yeah.
And I think that could be a good thing, is try to connect, you know, if you can get onto Facebook and try to find a Airbnb that's struggling right now, which there's plenty.
Oh yeah, that'd be good.
Get your clients in there for a couple months.
Yeah, and where are they, Renee? Irene?
So right now they're renting in Blaine, and they've been looking Anoka County or White Bear Lake area.
Okay.
Does anybody have anything out there coming up?
We have a house in Lakeville coming up. Is it way too out?
Well, I'll make a note of that. Who said that?
Katya, my husband Russell is finishing up the Lakeville house, and it's a Rambler, 4-bedroom, 2-bath.
Okay.
I don't know what price range they're looking at anyway.
Katya,
So
what's your-
I have a humongous monitor because I work from home. So when I sit down right now, you know, nobody can see my face. I'm not hiding it, just I have to stand up to be seen.
We don't have big phone books anymore for you to sit on, Katya, in the United States here.
Well, I don't have to know. I just have a very, very big monitor. And that's why you only see top of my head. Because, you know, the camera is on top, right?
Yes.
I never cared about the face, you know, like time or whatever. It really helps to work with documents though, or some other programs.
Yeah, so I'll make a note of that. I would say at this point we will consider almost anything.
They got till the end of May though, right?
They have till the end of May. They have good cash and good cash flow. They're still employed. They just have, you know, that score below 700. So. So yeah, if anybody hears of anything, let me know. We'll be looking.
All right, will do. Who else is seeing anything out there? We got a lot of people on today, so.
Are people going out into homes? I went yesterday into a home.
Yeah.
I'm going into homes several times a week.
Yeah, I can't see any reason why you wouldn't go into a home.
Yeah. Yeah, but barring they say they don't want me to go in. This was an older gentleman, and so I just sort of said, I'll do what you want. You know, I'll mask up, I'll wear gloves. I'm healthy, I haven't traveled. I asked him, have you traveled? Are you feeling okay? And I originally, and then I said, you know, if you want to just take a bunch of pictures to start, you have a smartphone? He said, I don't. And I said, okay, well then I'll come. And he said, fine. So off I went.
So I got invited in the middle of the day to a Facebook watch party. I've never even heard of them until I got invited to one. And maybe some of you were invited to the same one, but downtown Minneapolis had a huge demonstration this afternoon. Basically, as far as I could gather, it was a rent strike. So I'm wondering what else you guys are hearing about rent strikes around town.
What's rent strike?
That means the tenants are saying, freeze the rents, don't make us pay, and things like, you can't profit off of my home, so.
If somebody's trying to raise the rent right now? Or...
No, the tenants don't want to pay it because they were told they don't have to.
Oh, actually, I have a good story about it. It's just that first of all, I'm very thankful that there was a link 2 weeks ago, and it was Cincinnati video call, and they specifically explained how to work with renters who can't pay or ask for discount. So luckily, I have like 6 renters, and all of them are paying right now. At least I contacted everyone, and they said, no, we can pay because they either employed or they got unemployment or whatever. But my friend called me yesterday, Rahana. She's actually part of Amenria too. And she says, 2 of my renters called me and said that there is rental discount going on, even if they can get one. It's like, No, it's not. Well, I mean, so I explained to her what to do. Like, first of all, it's not like if somebody asks for discount, you just give it to them. They're supposed to explain why. So it should be in writing, and it should be maybe just for this month and monthly, like the same as unemployment. When you apply for unemployment, you don't just say, I'm not employed anymore, give me the money. So you have to confirm it every week, and you have to provide proof. So after she called them back and asked them to provide proof and told them that it's going to be writing and it's going to be monthly, like month by month, they said they don't need a discount. That's it. It's just some people taking advantage of it right now and saying, oh, there is discounts, how about we get one? They didn't need one.
Well, that's because the governor came out and the governors of all the states have come out and said, hey, look, you don't have to pay your rent because you can't be evicted.
Yeah.
And that's what happened. And so, yeah, I'm hearing stories of, like Heidi just said, rent strikes. I'm hearing a bunch of stories. And the local news I don't remember what, yesterday morning, I think it was, or Sunday morning or whatever, they had somebody, they were interviewing some landlord. And this is pissing me out, guys. You damn landlords who say, I'm high and mighty, so I'm going to make myself look good by giving my tenants free rent for a month or two. You're half the damn problem, right? Because now you're doing it. You're only doing it for publicity. You're not doing it for a real legitimate reason. You're doing it for publicity, and that now is getting spread out. And so they were interviewing somebody on TV, on the local TV channel. And he's like, oh, I after getting laid off, I was so worried. This is a guy. I mean, it was disgusting watching it. He was crying. And he was saying, I was crying. I was tearing up. I didn't know what I was going to do. And I was so thankful that my landlord said that I didn't have to pay rent for the next 2 months. And so the news anchor or the reporter is like, oh, this is so awesome, blah, blah, blah. So what do you plan on doing? And then he started listing off all the effing things that he's going to spend the money on and all the people he's going to help spend the money on it. Like, yeah. What? I'm like, what? And the news anchor didn't even have the guts to ask him what? Like, oh, that's so cool. That's so caring. What the hell's the matter with you people?
They assume that because we're housing providers that we're rich.
Yeah, and I'm watching stories on Facebook right now of people they're in tears because their tenants are not paying them, and there's no way they're going to be able to make their mortgage payments.
Yep.
They can't pay their utilities.
Yep.
This is all manufactured BS. And it's spreading because you got all these people saying, hey, I want to do, I'm going to be a landlord, a nice one. And then because of that, like what Heidi said, now you're getting people saying, well, shoot, then we don't have to pay our rent. And it's happening in smaller apartment units. And they're getting together and they're forming their own little unions and saying, we're not going to pay rent collectively as a whole group. What's a landlord supposed to do now?
Well, I think that's an important topic that we need to start to organize our thoughts around as collectively as landlords, because there's ways to handle it. I see this as a coming movement, and maybe I'm being paranoid, but I don't see things going away really soon. I think financially we're going to be stressed because the virus isn't going away soon. And so I think that there's probably some better ways than others to address this from the landlord's point of view. If you come out shaming people, calling them deadbeats and stuff like that, that creates somewhat of a us versus them dynamic. I think you can carry the message forward to say, hey, we're all in this together. Here's the real life impact for me. It's not just me, it's my investors who are people just like you who have money, in retirements. We're all trying to make it work, but coming from a human place of compassion. But what I've seen so far is like when that starts to erupt, it creates this warlike mentality of an us and them. And I think nobody benefits from that, I guess is the bottom line. I mean, these people are going to go away. If you separate the loony bin people out from those, from those groups who are supporting this movement, if you separate out, what's a legitimate issue for them that we can be compassionate towards, which there's lots of that, you can separate that out from the people who are just like, ready for revolution, let's make it end, it's time for change, and this radical element that is really still very fringe, but they get a lot of power in times like now. And I think we need to just be careful how we address that out there publicly to people, how we talk as landlords and help other landlords how to handle their tenant issues is really important right now. So.
Well, and you got to be personal with your tenants. And I think if you're a good landlord to begin with, it's not a problem. Like our tenants, not a problem. They're all paying. They all paid. We went even collected the rents on this last week. and went and met with them and talked to them, and they paid their rents, no problem. You know, and they're not trying to get a free ride because they're working or they're getting unemployment or they're on Social Security. Section 8 anyways. So they're paying, that's coming in automatically.
Yeah. But I think that even that, it's like, I think we understand that as landlords. We know that most people actually do have the money, at least now, and they're not trying to be free ride, you know, get a free ride here. But I think acknowledging that some people really can't pay, but coming at it not from, you know, if you're not paying, you're a deadbeat. But hey, look at, there's some resources out there to help you. You know, are you checking those out? Or, you know, but addressing with compassion, I think tends to isolate the real fringe folks in these movements. Yeah. And you're right, the smaller landlords are going to do better here with personal relationships. God forbid if you have, you know, the 500 plus unit apartments, because those tend to create huge cultures, subcultures within cities and within their own. But anyway, I just wanted to raise that. I had heard rumblings of it, but I was taken by surprise at how many people showed up to do this demonstration this afternoon. So
how many people did you see on that?
What's that?
How many people do you think was there?
It's so hard to tell because it looked to me like maybe they were just circling the block. So the demonstration, because people are social distancing, wasn't a parade. It was, people were staked out in different corners, really more than 6 feet away, but mostly it was honking horns. But I think pretty sure they were going around in a block, like the downtown Minneapolis, like I don't know if it was the government center, but maybe the US Bank. They were just kind of circling. I'm pretty sure, can't guarantee it, but I'm pretty sure I saw a couple vehicles coming through more than once. So I don't know how many. They just looked like the traffic was backed up bumper to bumper going in this line around the city. So
that's sad.
Yeah.
Yeah, the challenge with it all too is that, I mean, when push comes to shove, I mean, the number of people who cannot pay their rent right now actually cannot is very few.
Right.
I mean, because of the programs, because of the expanded unemployment and things like that, I have 2 rentals where we talked to them and they were not able to make their payment right now. They're waiting on their first unemployment check and then they're going to pay. So, but all the others paid. So, I mean, we have, for the most part, if someone says they can't pay, unless they run their own business effectively, they can pay. Then they're choosing not to at that point. I mean, outside of some really extraneous thing. I mean, based on the issue at hand, if they run their own business, I can understand it. If they were an employee and are now unemployed, they can afford to pay it because they expanded unemployment.
So Glenn, what would you do if you have renters that would just say, "Oh, no, we are not going to pay. You can't evict us anyway."
Then they don't pay. I mean, I can't. Yeah, it's like I can't force them out, but that shouldn't be. I mean, ultimately, when push comes to shove, that should not cause a hardship on my side. Because, I mean, I've been a landlord for 25 years. I understand the need to have reserves. I mean, I don't want
to pay for them to stay, because I still, I'm not going to, lose the house. I'm not talking about that.
Right.
Just, how do you deal with it? Because you have experience. I'm just picking your brain, because you probably heard it before or not.
Well, when the first day, if someone does that with me, the first day we're able to evict, we're evicting. Plain and simple.
And I'm going to put a caveat to that, because it's not so much that they say that they're not going to pay. It's the ones that say, I'm not going to pay. Yeah, the first day, if you just flat out won't pay and you're not even trying to work with me, yeah, the first day we can evict, that eviction letter is getting sent to the attorneys. If you say, hey, I'm struggling, what can we do? I am not evicting you when we get to the end of this. I'm going to work my butt off to work with you to get caught back up to keep you on that property. It's the ones that want to play the game of, hey, I was told I don't have to pay and you're a slumlord, so F you. And I've heard it. I've got members that have actually recorded their tenants saying that to me, and I've heard it on their recordings. So they're saying it, they're doing it. And I don't know if I want to say it on here, but there was a Minria member last week that got on there. She was obviously a tenant, and she started calling another landlord a slumlord because they were just making a comment. People, pay your bills. She just said, pay your bills. And that Minria member who got on there and just started slam basing this member, saying that they were a slumlord and how dare you and blah blah blah. And I'm like, what? Just because the governor said you don't have to pay your bills doesn't mean you lose all personal responsibility. That's the type of person that, yeah, they're gone.
Yeah, I mean, pretty much all landlords out there are working with folks at this time if they're having a challenge and they're open and communicating. If they're not saying anything, if they're just saying, nope, I'm just not going to pay, and there's no conversation, well, you deal with those people differently because, I mean, plain and simple, they're a different class of people. Right. And they're trying to do something differently than most reasonable folks are trying to do right now. So you work with the folks that you can. If they need it for some reason, you work with them. The ones who are uncommunicative or just say, no, I'm just not paying, plain and simple, well, you treat them differently.
You treat them the way they want to be treated.
You treat them the way that they deserve to be treated if they're treating you that way.
And then, yeah, thank you. And then, okay, so there is a, eviction freeze, right? So I can't evict anyone, but what if they're, if the contract is up, the lease is up, can I not extend it or do I have to extend it?
So there, in other states, I've heard that the courts are open to hearing breach of the lease types of claims, just not claims based on non-payment of rent. And I need to probably look into this further for our courts, because our courts came out before the governor said no evictions, and our courts said no evictions. In fact, no anything except emergency, essential things. But what I've been thinking about this, not that I've had to deal with it yet, but it seems to me that, if you can make the case of any kind of endangerment of other tenants, and, just anything that would be, it's in the society's best good, not just your personal pocketbooks to get them out. I think you can get a court date. My guess, I don't know for sure. But yeah, I think if it's just their lease is up and it's time for them to go, but they don't have any money, therefore they're in a job, they're not going to get another apartment. You're going to be in the same situation as a non-paying tenant. In that case, they're going to stay and they're not going to pay probably.
Well, I would just talk to them and say, well, your lease is up. What do you want to do?
Yeah. Yeah.
Yeah. Do we want to wait? You want to stay here? And if I was you, I'd just let them stay there, because what are your other options? Nobody else is out looking for rent right now either, because they're all staying where they're at because they don't have to pay. If they go to a new place, they're going to expect to have to pay now.
Actually, it's not. I had people moved out last week, and it was planned. They told us in January because they bought a new house. So it's actually a good thing. So we knew in January that they're moving in the middle of March. Middle of March. So I got my keys. So we knew it's coming. So they moved out. 2 weeks we were cleaning. They were there for 4.5 years. So obviously we had to paint, carpet, whatever. So for 2 weeks we were working on the house. And then I pre-listed it saying coming soon. I had dozen calls. Mike, we still actually fixing downstairs and we already have someone moved upstairs. And my requirement is I ask first and last months upfront and damage deposit. So I had a guy calling me every day, So, and he got me $4,500 in hand to get the keys, and we still working. The house is done. We need to replace the shower tab, and it's a little longer downstairs. We're still doing this, and he already got the keys, and I got $4,500. So it's actually the renting right now. If you put the house on the market, you will have a lot of calls.
Yeah, I've rented four apartments in the last last 2 weeks. I've rented 4 apartments.
And there was a lot of calls, right? It's not like you only had one call and you had to rent to whomever.
Yeah, I mean, I paid a guy to leave because he told me he wasn't going to pay rent and I couldn't get rid of him. So I paid him $600 to leave. I don't know where he went, but I re-rented his house 2 days later for more money than I was charging him.
Good.
Yeah.
So there's a demand out there.
So that's the thing. We actually, when we posted it, we said phone interview requires before scheduling a showing. And during that interview, I would explain that there is no open houses. So we're going to schedule each family like alone. And then the agent will stay 6 feet away from you and you will have the gel or wipes to clean your hands on the way out of the house. So this way, you know, I mean, we're not gonna endanger anyone. And that actually the first guy who showed up brought the check and took the keys. So, you know, so it was kind of not difficult at all.
Well, good.
I mean, back to Adam's point, I've had a lot of success with, you know, in those enticing sort of the carrot rather than the stick approach. I mean, the thing that I think landlords maybe don't recognize, this movement comes from a power shift, that, or at least a perceived power shift. The power shift is real right now. The question is, how soon can we get back to landlords have a lot of power with eviction tools? So you really got to shift the way that you can entice people and more aggressively look at those options of rewards. Like, we put people in, you know, here, store your stuff. I realize you're going to be homeless. Good luck, bless you. And, you know, this is the best thing for you for all these good reasons. But if you come from that compassionate voice, which is hard because you feel very threatened by these, like they're not doing what they said they're going to do. But I think, yeah, focusing on creative solutions and helping them solve their own problems is something, like, I know we didn't sign up to be social workers, but if we can help people solve their own problems right now, because we don't have the power tool to use of eviction, at least for not right now. That would be what I would encourage my clients to do, is so be a problem solver, become a little bit of a social worker maybe, and you'll find it less difficult than the other route that we have.
Well, and that's the way we're always supposed to be.
Yeah.
That's what I've always been. That's what we've always supposed to have been. I mean, nothing should be changing right now.
I like what you think. Not everybody thinks that, though.
No, I mean, the way we're approaching this should not change from the way we were approaching it 2 months ago.
In terms of being compassionate and trying to help people, absolutely, yeah. But I think the message. And yes, Heidi, we are social workers. That's what we do. That is our product is not the property. Our product is people. Yeah. That's what we do, is we help people. We just happen to provide them shelter. Yeah. Some of us sell it to them and some of us rent it to them, but we still have to, the people that are successful at this business are the ones who are good at dealing with people and helping them solve their problems and helping them prevent problems from becoming worse. I agree wholeheartely. And I think, you know, I'm preaching to the choir, obviously. So I wanted to do this and get people in here doing this every you know, just on a regular basis. I know. I think this is wonderful. Thank you for doing it, Mike. I really appreciate it. Well, you're welcome. Every day now until either we get out of this, which apparently now going to be another month, or until we all give up. One or the other. Did they extend the deadline? I thought that's ending at the end of April, or is it going to be? What's that? Is it so? Did they extend that deadline for lockdown, or? Yeah, that's what we were just hearing. They just push it to.
They extended to May.
May 4th.
May 4th.
May 4th.
Yes, I just received a message. May 4th.
Which won't affect me, but apparently it's going to affect everyone else because nothing has changed in my life. Other than I'm at the office by myself. Because everyone's working from home, but I'm still doing all my normal stuff.
Well, don't you have Easter party usually with your family? Yeah. Well, our Easter party is canceled.
Not ours. Our Easter party is on as scheduled.
Well, we have a lot of old people, and Russell's sister has 7 kids, so no, they're not coming to my house.
You're not having virtual Easter, Katia?
Well, I have to feed them. I'm usually the one who's hosting it. So what's the point? They come.
Yeah. Well, you'll have to sit up so they can see you, but still, you could have virtual Easter.
I'll be having real Easter with real people. There'll be nothing virtual about our meal.
Right.
So, well, you guys have a great day. Thanks for coming on today. Back here tomorrow. And I always go back to the real estate promo at that link. I also put it on the Minria site. So you can always go to the Minria site. It's on the real estate promo, find the link. But I'm going to update the link every day to this meeting so that that link doesn't float out there forever and get these Zoom bombers in there. So every day, just come back in here if you want to come and join us for an hour every day for the next, probably next month or so here.
Yep.
Thank you.
Sounds good. Be well, everyone.
Bye, everyone.
If you guys haven't and you wanted to join the wholesaling class tonight, go to the Minria site and register for the wholesaling class tonight if you want.
Mike, I'm gonna try out the virtual
Oh yeah, try out the virtual
night
with
to
Joe.
see if I can get that running for the end of the month too.
Yeah, and so get on there early with Joe, because I think he's going to get on early to practice and kind of hang out and network while they're getting things up and running. So get on there about a half an hour early and then talk to Joe about that.
Okay.
Because I'm
I'll
sure
let you know what I
he's
come up with.
If he gets it figured out, I'm sure he'll help you get it figured out too. So we can
Okay,
do it
good.
for the end of the month. That'd be awesome. All right, and thanks Kim for coming out and sharing with us. Thanks everyone else
Kim.
Thanks, Kim.
for coming out too. All right, we'll see you
Everybody.
guys. See you guys tomorrow.
See you
Okay, bye.
later. Thanks.
Bye.
Glenn?